Welcome, everyone, to another episode of StableSchool podcast. I'm Raza, your host, head of growth at Scroll, and I'm here with Chuck from S&P Global. Chuck, welcome.
Thank you. Great to be here.
Please introduce yourself and tell us a little bit about S&P Global.
Sure. So I'm Chuck Mounds. I'm the Chief DeFi Officer at S&P Global. This is a team, and my role was set up 3 years ago at the request of our then CEO to launch a team that focused on crypto finance and digital assets. And our purpose of our team at the highest level is to help the organization build the products and services that are fit for purpose in digital asset markets, and to adapt our existing products and services with that same mission. So, as you may know, S&P Global is the world's largest rating agency. That's S&P Global Ratings. We're the world's largest index provider. We're also the world's most important commodity price provider and one of the leading data and analytic franchises. So we have a lot of different touch points in markets. But one thing that helps tie the organization together is that we provide the data, analytics, and benchmarks that empower decision-making, and that also help improve market liquidity and price discovery. So my team's role is to work across the entire organization with that high-level purpose of building and adapting products and services to be relevant in digital asset markets.
Gotcha. Could you tell a little bit about what motivated S&P Global to develop a dedicated framework for evaluating stablecoins?
Yeah, so it was really a journey. When we launched the team, I'll give you a little bit of context. When we launched the digital asset team a few years ago, we had previously, 6 months earlier, started our digital asset research lab. And that was bringing together thought leaders and experts in the organization to focus on the key issues around digital assets and the crypto financial ecosystem. And so launching that digital asset research lab really helped build a cohort of crypto experts within the organization. So that's an important foundation. So if you flash forward after my team was founded about 3 years ago, we spent maybe the first year or so out in the ecosystem speaking to every kind of stakeholder you can imagine. So crypto natives, TradFi, buy-side, sell-side, policymakers, whether that's regulators or legislators, academics, other kind of market participants like consulting firms, private equity, private credit. We really spoke to a very wide range of stakeholders. And one consistent theme we heard coming back was, and this was even before Terra Luna collapse, a consistent theme was that we don't really have insight into the risks that are inherent in different kinds of stablecoins and between stablecoins. So we saw that as an opportunity to leverage our historical expertise in credit risk analysis and bring it into the crypto financial ecosystem and evaluate the risk of a stablecoin depegging from its one-to-one mark against a fiat currency or basket of fiat currencies. And so once we ideated that there is a market demand for this, we also had built some underlying capability set on our analytics side to be able to do that work. And so that really that came together in the ideation of launching this Stablecoin Stability Assessment, which is not a credit rating. So it's not measuring a probability of default or timely and full repayment of a debt issuance, but rather looking at that risk of a depeg for a stablecoin. And because we had kind of launched the digital asset research lab and built that kind of internal capability set to do that analysis, we were able to launch that product.
So from a high level, how does the Stablecoin Stability Assessment framework work? Like, what are the main pillars?
Yeah, so it starts with an asset quality score. So looking at the asset quality that underpins the stablecoin itself, or the linkage to the stablecoin. And so the stablecoin provider will get an asset quality score, and that's the highest the score can be. then there's a handful of additional factors that are evaluated that can bring the score down. And so those additional factors can include things like bankruptcy remoteness or the regulatory environment or operating risk as just some examples. So the scores come out on a range of 1 to 5, 1 being the best and 5 being the worst. There are no stablecoins at this juncture that have the top score of 1,
Oh, wow.
but several have, the score number 2, and then going all the way down to 5. So all the scores to date are in the 2 to 5 range.
Yeah. What would make a stablecoin score a 1?
It will really depend on the stablecoin itself. But having that excellent asset quality score is the starting point. And then looking at the parameters around, most notably the bankruptcy remoteness and any kind of operating risk. Those are some of the, I think, important characteristics that could could continue to bring a score down.
Gotcha. Just so I understand correctly, what the framework does here is to assess the risk of depegging.
Right.
And that's it. That's the scope of...
That's the scope. And so a question we often get is, well, can a stablecoin provider also have a rating? And the answer to that is yes. So to date, there are no stablecoins that are rated. However, we've had discussions with many different stablecoin providers to explore whether getting a rating would make sense. And in that context, a rating would be kind of a regulated product, more like a traditional rating that would be measuring the risk of default probability of the provider, not just the depegging risk. And so we believe that going into a future state of stablecoins and kind of expansion of use cases and mass adoption of stablecoins in the financial ecosystem, that ratings will become a kind of a standard feature for stablecoins, especially for stablecoins that have institutional use cases and adoption by institutional players. And so I could imagine in a future state, and after or during a phase of mass adoption, that we could end up in a world where you have some stablecoins that are targeted more towards and have use cases more centered around retail use cases, and then stablecoins that are utilized more heavily and whose use cases are more institutional in nature. And it could be that in that instance, in that hypothesis, the institutional stablecoins would want to have a rating or need to have a rating to get that traction and institutional buy-in, whereas the retail stablecoins, might not. That's just a hypothesis. I don't know if it's going to turn out that way. But we think that the ratings, along with the stablecoin assessments, can be important tools to bring the use cases and utilization of stablecoins full force into the financial markets and ecosystem.
I would argue, as a side note, that that's pretty accurate. We're seeing a lot of stablecoins popping up. They either have a very specific use case or even, only utilized in specific regions because of specific integrations.
Right.
So I think that's pretty accurate.
Yeah, that's great to hear, actually. And I think that also one of the challenges for traditional firms is, being nimble. Big traditional firms often, are slower to move and can be cautious in their product development and wanting to have clarity and certainty around kind of end clients and how that's going to, and how your products develop with that. So when you're facing or working in a market that's super innovative, has strong elements of disruption in it, and is moving very quickly, both from a technology perspective, but also a policy formation perspective, you have to be pretty nimble in how you think about launching your products. So we saw a clear need for the stablecoin assessment based on our interactions on a global basis with stakeholders. But I'd be the first to admit that the use cases and the expansion of use cases for stablecoin is the way it could be used 5 years from now, we might not even be able to imagine yet. And so just having that open mind to the kind of how the whole ecosystem evolves and what the new use cases are, we don't have to prejudge or guess all of that. We just needed to provide a framework for understanding the risk of stablecoins, and then we'll keep an open mind to how the whole ecosystem evolves. And if it turns out there's follow-on products or follow-on analysis that can be done, then we'll go there when that time warrants. But projecting on the retail versus institutional, that's a perfect example. When we launched this ideation to launch this product, that wasn't a clear parameter. Or at least for me, it wasn't a clear understanding that the market could turn into these retail and institutional tranches. But we built a product that serves multiple purposes, and I think it will largely be dependent on what does the end user require. Like if retail end users want to have clarity and information on risks inherent with depegging, then those might also be getting rated. But it's hard to forecast whether that's going to materialize or not.
Yeah, I'm curious to your thought. Does crypto sometimes feel like the wild, wild west?
Well, I mean, there's a lot of analogies to that. And being an American, the Wild West carries with it a lot of connotations. But I do think that the crypto ecosystem is one of the most innovative in the world, and maybe the most innovative in the world. And that's actually a talking point that I've had with internal stakeholders and other traditional clients as well. Is it's pretty common for a traditional firm to look at kind of a disruptive technology that's emerging and basically give you the 20 reasons in the short term why this isn't going to work. Like all the challenges, all the obstacles, whether it's technology, it's client use cases, regulation, policy formation. Like there's a long list of obstacles for expansion and kind of institutional adoption of crypto finance. And my response to that is, when you're dealing with the most innovative set of the most fastest moving set of innovators maybe in history, we should almost assume that today's problems that we can identify will get addressed, that the innovators will find solutions to the series of obstacles that present themselves. And you really have to be able to look beyond like the next 6 months or 1 year and think about, okay, if you can jump to an assumption that these challenges are going to be addressed, either through the technology or through external catalysts like market policy formation, then you can start to do the real innovation and get prepared to bring the products and services that your clients are going to need in the future. And that future may be next month, it may be next year, it may be 2 or 3 years from now. But I think for us as an organization, what's important is that we are there for our clients when they need us to be there for them. And so, when we launched our stablecoin product, we made it free for the market to access. And the reason we did that was there wasn't kind of a viable, in the short term, a viable commercial pathway for the stablecoin product, even though we saw the need for it. But kind of having an open mind that once the market evolves and matures, those commercial pathways can evolve. But in the short term, there is a need for this sort of analysis in the marketplace, and we felt like we could leverage our expertise to bring that to bear in the marketplace.
You left it at a perfect touch point for me, because do you feel like, I feel like S&P Global is called in when there's a new financial product, or there's a new wind, or there's a new innovative technology out there, but people need to understand it. Do you feel like there's a role for that?
Yeah, well, I think we have a very extensive thought leadership role in the markets, and what I would like to think of as we bring a tremendous amount of intellectual capital into the marketplace. Yeah. So we have maybe 1,500, 1,700 credit analysts globally that provide a deep level of credit risk analysis into fixed income markets and capital markets that stakeholders around the world rely upon to assess risk, to make investment decisions, and that help inform price discovery and kind of help support market liquidity. So education is a big piece of that. And so, as I said, when we launched our digital asset research lab, it really had multiple purposes. One was to build kind of an institutionalization of crypto knowledge within the organization. And then the other external facing goal was to be able to assist our clients and future clients as they begin their crypto journey for us to be a resource for them and a partner for them, no matter where they are in their crypto journey, whether they're just at the very beginning or more advanced. And so I think that S&P Global can and does fill that role in the marketplace.
Which quantitative metrics do you weigh the heaviest in your assessment when you look at your stablecoin assessment framework?
That's probably a better question to ask to our analytic team.
Yeah.
So just for clarity,
sure.
Rating agencies are highly regulated. So you have a commercial function or a commercial function, which I sit in, which in a strategy role is on the commercial side. And then you have the analytics side. And the analytics side are the folks who do the deep dive in the analysis, define the models, define the criteria, define the methodologies. And we're separated by a Chinese wall. So the analytic methodology and the approach that is driven comes from the analytic team.
That makes sense.
And so they'll look at a number of characteristics and factors that go into that score. So some of them will be on the stablecoin side. It's primarily public information. Historically, going back at the original, it was all public information, and now there's some maybe extra latitude or increasing latitude between public and private information. On the rating side, it's always a mix of public and private information. So I'm probably not the best one to opine on the specific details of the analytic approach, but it's suffice to say there will be a mix of qualitative and quantitative factors that go into the analysis.
That makes sense. Just a quick question, on the different types of stablecoins. I'm assuming the framework does, but could you tell me, maybe shed a bit of light on how it differentiates between algorithmic stablecoins or yield-bearing stablecoins, or even what's your take on it?
Yeah, so the Stablecoin Stability Assessment is really focused on stablecoins that target a peg, with real assets, usually high-quality assets behind it. So whether it's U.S. Treasuries or deposits or other kind of cash-like instruments. So there is, I think, going to be an opportunity perhaps to explore, should that framework for assessment be expanded beyond that. That hasn't really been determined yet. I would say there hasn't been a demand for that. So the stablecoin assessments we provide cover about 95 or 96% of the global market, maybe even more now, the global stablecoin market. So we're really taking our lead from where the market is. And as the market expands, or if client demand expands to include a wider range of stablecoin assessments, we'll look at that. But there hasn't really been kind of a need or demand for that to date.
Yeah. So when you're assessing counterparty risk, what specific red flags or best practices do you look for?
Well, once again, that would be something that would really clearly fall in the wheelhouse of the analyst. But the factors around counterparty risk will include kind of their own credit quality, any kind of operational risks that come with that, any kind of risks that relate to kind of regulatory kind of frameworks, policy frameworks. Would be some of the key factors in looking at and thinking about counterparty risk.
So, you touched upon regulation. That's actually where I wanted to head next. We've seen Mika coming out in Europe, and Vara over here in Dubai, and just spoke with another guest who was saying that the States is gearing up for a big bill coming up soon.
Right.
Yeah, I forgot the name of the bill, but it's basically going to treat stablecoins like dollars.
Yeah, so there's a couple. There's a couple of pieces of legislation in the works, but our expectation is that the Senate and then the House will pass stablecoin legislation maybe as early as next month or June, which when you compare it to historical, like where things have been in the U.S. over the last several years, that's really exciting and kind of amazing that it could move so quickly since we have a new executive branch, a new administration, and a new Congress after the last election. And we feel that the U.S. passing stablecoin legislation will be an important unlock for the entire crypto ecosystem, most notably and kind of targeted in stablecoins, but also beyond that. So we do also expect, there'll be discussions around market structure legislation. I think there's been some commentary in Washington that the market structure legislation they would like to get passed before the end of this year, so 2025. That seems like a tall order. I mean, there's a lot of different stakeholders engaged and would have commentary and perspectives on market structure legislation. But I think, getting a stablecoin bill passed in the very short term is a huge signal and important marker for stablecoin markets and also crypto financial markets broadly. And then to follow that up with hopefully in pretty quick succession, a market structure bill will really impact the foundation for mass adoption of traditional players into the crypto ecosystem. The other thing I'd say is that I think U.S. legislation and the shift in policy approach across the executive and legislative branches can also be a catalyst for more cohesion across regulatory jurisdictions. So obviously it'll have a big impact on what can happen in the U.S., but I think an important byproduct of that will also be the U.S., once you have the world's largest economy and largest financial market, like actively engaged in the ecosystem, I think that'll be a unifying force for seeking out cohesion across jurisdictions on regulatory frameworks. And ultimately, that will, I think, help facilitate adoption and use cases in the crypto ecosystem.
Yeah. I'm definitely personally very excited, actually, that regulation is becoming more specific and it's at least moving in a certain direction. Definitely the States, it seems very exciting.
It's really amazing. We spent...
I can see your excitement on your face.
It's great. We spent a fair amount of time in Washington, D.C. over the last few years. And the change in tone and demeanor and questions has really been profound over the last few years. So even before this last election, just in the last year, the advancements and kind of thinking around stablecoins, crypto more broadly and stablecoins in particular, was really notable in Congress on both sides, so both the Senate and the House, and in both parties. So you could really see, like in a country where there's a lot of partisanship and elevated partisanship that you've seen or talked about a lot. One area where we've seen pretty good bipartisanship is in crypto, and particularly around stablecoins. And I think you're going to see that come to fruition here in the coming quarter, hopefully with this stablecoin legislation.
Interesting. Yeah, I definitely think that in the road to mass adoption, this has always been I think a big blocker. Obviously, clarity is for entrepreneurs and for the people building this. It's very, very important.
Absolutely. And I think there's a couple of other things with the U.S. Kind of shifting its policy gears is you're setting the foundation for financial sector innovation to kind of have a home in the U.S. in a way that hasn't really been the case for the last few years.
Yeah.
And then so we're going to see, I think, innovators maybe who left coming back and also spawning a new generation of innovators emerging. But at the same time, I think when you have more policy clarity for traditional, already established firms, that's going to unlock their ability to innovate as well. So I think that can be and will be a big catalyst for innovation in the sector is when the big banks and financial sector players are more free to actually innovate in the U.S. I think that will be a key unlock for the sector as well.
Yeah, 100%. I couldn't agree more. If you look at institutions today, going back to this Stablecoin Stability Assessment framework, how do institutions use that framework today, and how do they use it?
Yeah, I would say it's still so new that we probably still don't have the clarity and body of evidence on all the use cases. And I think that as we get stablecoin legislation and stablecoins take a more prominent role in financial markets, as also with traditional players, those use cases will become kind of more profound and clear. But you can imagine instances where if you're creating a financial product, like if you're issuing an on-chain bond and you're doing it in a stablecoin, it's important to know which stablecoins have a higher risk of depegging. If you're building a structured product that is created, say, for high net worth investors or sophisticated investors, and stablecoins are integrated into that product structure, it's important to know if at the time you rely on the use case of the stablecoin that it's worth what it's supposed to be worth. And so those are instances where I think you can have the Stablecoin Stability Assessment score integrated into how those products are created, or be kind of a threshold or a barrier to which stablecoins get used and in which way, but also as a trigger, perhaps to kind of, if a financial product is structured a certain way, and you have a stablecoin depeg or some other aspect of the product kind of sets against a market trigger, knowing what that stablecoin risk is going to be an important piece of that and of that structure. And that can sit alongside a rating as well, because when you have a stablecoin score that measures the risk of depegging, you can have a stablecoin that depegs but is still a viable stablecoin. And that is still a going concern. Conversely, you can have a stablecoin that becomes unviable and is not a going concern. And so they're both, I think, going to be relevant when you look at how stablecoins will be integrated and utilized in a global financial market.
Did you guys already receive feedback from the institutions or your clients that are using it? What's their experience using the framework?
We got extensive feedback when we were devising how to do the analysis, and does doing a stablecoin assessment make sense? How would they envision using it? What are the key parameters that they would consider when looking at a risk assessment of a stablecoin? So we got really extensive feedback in doing that. I would say since the launch, we've had some feedback, but I wouldn't say it's been. Let's just say, I think in the next 12 to 24 months, with greater adoption, with greater use case rollouts, I think we're going to be getting a much kind of what I would consider a more reliable sense of feedback that we can kind of harness in kind of our future product development. It's still so new. And right now we score about a dozen stablecoins, which in the like it covers most of the market, but there's so many more new stablecoins coming, and a lot of interest in launching new stablecoins. I think over the next 12 to 24 months, we're going to have a much better volume of feedback on how the scores are utilized in the ecosystem.
Yeah, that makes sense. There are certain indicators right now that TradFi businesses are looking at DeFi or exploring DeFi. Is that something that from S&P Global, you're also seeing that they're taking a look at DeFi, like what are all these mechanisms that are going on? And
yeah, there's it's been really interesting when we're out talking to our traditional clients. There's a very wide range of expertise and approaches that are being executed. And I would characterize it that some organizations are very far advanced, have set up digital asset teams, either at a corporate level or within divisions, which have very specific product goals and objectives. Whereas other organizations are maybe much earlier in their digital asset journey. They may still be in the phase of kind of setting up an internal working group to really opine on how should they think about digital assets, crypto, and how would it, so it's kind of an informal, like people have work in this working group on top of their day job, as an example. And then you have people kind of more in the middle that have advanced beyond the working group, have some dedicated headcount to start to ideate and think about digital asset execution and building a franchise. And so there's quite a number of institutions who are in that phase, and then a smaller number of handful who are really far advanced. Clearly, with policy formation shoring up in the United States and adoption and use cases by some of the world's most important financial institutions already happening, the entire ecosystem is going to move more towards that, building the expertise and capabilities to be able to have a full business in the ecosystem. And to me, the challenge is, what does that time frame look like?
Yeah.
To me, the pathway looks very solid, very clear. It's just a question of how the timing unfolds. And that will be driven by a combination of both internal drivers at an individual organization and external drivers, probably one of the most important of which is the policy formation in both regulation and legislation.
Yeah, and in those external drivers, do you feel like S&P Global has like a role to play to like speed that up? Or
well, I think that I don't know that we speed it up, other than we're there as a resource around education. And education is really the foundation in the TradFi world, where it all starts. And I have a TradFi background, so before coming to S&P, I worked on Wall Street in the fixed income business at a variety of sell-side firms. And of course, when I first heard of crypto and Bitcoin, I was a complete skeptic, thought it was such a scam, gave it zero credence. And I would say that my peer group, we all start there.
Very recognizable. I was there too. Yeah,
right.
TradFi background, back in insurance. I remember I saw it like 3-4 times. Like, no, not touching it. No, not touching it. And 5 years ago, made the plunge. Yeah.
Right. So we all kind of start as a skeptic, and I think on the pathway from going from a skeptic to a believer and advocate, is the common foundation is education. Yeah. And so for me, in my journey, I was doing a special project on debt capital market structure and how should S&P be looking at and thinking about changes in debt capital market structure and what it means for our business. And I went into that project thinking like, oh, I know what this is going to be. I've been a market practitioner for years. It's going to be some mix of client demand, regulatory environment, and technology. So on the technology side, I realized I didn't really know anything about blockchain. So I contacted a friend who was in the fintech space, and he said, just read the Bitcoin white paper. Start there. It's an easy read. And then we'll take it from there. Once you read that, I'll give you some other readings and we'll discuss. And I thought, okay, this is a good pathway for me to learn. So literally 10 minutes into reading the Bitcoin white paper, I kind of put the paper down and thought, oh my God, if this technology does what it pretends to do, this is going to transform how markets work. So I went back to the executives that asked me to do this project. I said, we need to reframe my project. And the project should be changes in debt capital market structure that are incremental in nature, which is everything we know, and changes in capital market structure that are transformational in nature that center around blockchain, smart contracts, and cryptography. And so that was the beginning of my journey. And since that moment, my senior management agreed. My role shifted to focus on that, and that's all I've worked on since. So it's been an amazing journey in the space, and I've had my own journey, and it's starting with the education and kind of upskilling myself, and have been working consistently with my partner Charles Jansen internally to help upskill and kind of elevate that level of knowledge and bring our internal stakeholders on their pathway to understanding and becoming kind of they may not be crypto native or won't be crypto native, but the goal is to get kind of an institutional layer of crypto fluency. And so that's what we're striving for and have been working to do for years now.
I'm curious. Like I said, I come from the banking and insurance world. I know it's not easy to convince a board or even a senior leadership to be like, hey, we need to reframe this, especially because, like you said, crypto, I was very skeptic to it as well. And the majority of the people internally are as well. So when you come back into the room being like a believer or you see merit in this technology, sometimes you're viewed as a little bit crazy.
Totally crazy sometimes.
Totally crazy.
I would say so we were fortunate that our executives at the firm are very open-minded and intellectually interested in learning. And in fact, our team was created really at the behest and kind of support of the CEO. Who had spent years learning about the digital asset ecosystem. So when we posed the idea that I think we need to focus on this, and right now, like things are happening right now, he and the executive committee at the firm were all on board with that. Now, what we found is that when you went a layer or two lower and start talking to leadership or kind of other leadership kind of below the executive committee or even a layer below that, like execution leaders, there was a lot of skepticism.
Wow.
And so you just kind of had to pick and choose. If you ran into an internal player who was really skeptical, you just kind of have to decide, okay, am I going to spend the time to try to get this person educated and on board, or am I going to move on to the next person? And so, when you're dealing with these, big internal these big organizations with a lot of internal stakeholders, back a few years ago, there was a pretty solid number of skeptics. I would say today that's really changed. And it's changed because the market use cases have become more clear.
Yeah.
It's changed because the regulatory paradigms have become more clear. And then it's also changed because you've got now big recognized names who are fully invested and moving into the space. And even if you're a skeptic in your heart, you can't ignore that all these external catalysts are happening. And even if some people might even begrudgingly say, okay, I guess I have to focus on this now. So I don't really see the same level of skepticism today that we saw even like 2 years ago.
That makes a ton of sense. I think that there are just like major moves being made and real use cases. I just came back from Nigeria, Lagos, and visited Kenya, Nairobi. What stablecoins are doing there, not just disrupting but supporting. It's really amazing to see. But it's really refreshing, actually fun to hear again. Like I've been outside of the corporate world now for 5 years. I could resonate so much. Like built a data engineering platform once, and when I went back into the boardroom to ask for additional budget and to reframe a project, that is very difficult. So kudos. I know that's not easy to like talk to a leadership, but it does help. Like you said, if leadership is open-minded and they're very like forward-facing, I mean, that's a blessing.
I remember when we got started, our CEO asked, "Okay, what are the things we can do right now to get this going?" And the first thing was, we as an organization, leadership needs to have an open mind. That's the starting point. having open mind. And then the second thing is upskilling and education. And so that was the beginning of launching the Digital Asset Research Lab. So that's how we started, like
Amazing.
with the verbal statement of we need to operate with an open mind here. And then putting the foundation in place for that internal education and upskilling that then manifested, a year or 2 years later, and kind of developing new products and being kind of more implanted into the ecosystem.
Amazing. I think, we've almost reached time. I have one more question. Personally, I'm super excited that, there's an independent standard coming. I think these are the things that we need to do to make sure that, crypto or even stablecoin specifically come to the masses. If there are any teams listening today, what can they do to improve their risk profile? What advice would you give them?
Well, I will have to say that we can't give advice.
Gotcha. Okay.
So I can't really kind of give any kind of advice on that note. But what I would say is that if you've got stablecoin issuers or providers who are potentially interested in having a rating or seeing, how it would fare in a rating process, certainly reach out to us. We do the kind of, if we get an incoming request of, hey, we're interested in getting a rating, we hand it over to our analytic team. They do a quick kind of informal assessment of, can we rate this? And if so, if it can be rated, what methodology would we use to do a rating? And then we go back to the issuer and say, yes, we think we can rate this, or no, we don't think we can rate this, and talk about what a commercial dynamic would look like. And then if everyone's in agreement, then the process moves forward and it becomes an official, kind of an official process to getting a rating. So we're certainly happy and eager to speak to providers and creators out there about what, if they're interested in having a rating and having an external trusted third-party provider like S&P Global do an assessment. We're happy to have that conversation and see if there's any road to working together.
Amazing. Chuck, this was a very refreshing conversation for me. There's so much going on in the space, but it often feels like we're moving like very, very fast. And then looking back, you need to, make sure we take the rest of the world with us on this journey. And it feels like a rating system like this, could help. But also it's just like very, refreshing to hear again, like what it looks like on the corporate side of things. Excited for what S&P Global will bring in terms of stablecoin.
Thank you. So are we.
Yeah.
Thanks for having me.
Yeah. Thanks, Joe. All right.